You're listening to Money Never Sleeps on the UCW radio show. In your face.
What we got here is a failure to communicate.
Oh, have I got your attention now?
Greed, for lack of a better word, is good.
You know what I mean?
Money to be made in a place like this.
Money never sleeps, pal.
You're crazy. Don't run when you lose. Don't whine when it hurts.
You know what it takes to sell real estate?
It takes brass.
I've fallen, and I can't get up.
All right, welcome back to Money Never Sleeps Quick Shot, and today we're talking about Shake Shack. Now, they just reported their earnings, and it was a blockbuster. Their EPS was 9 cents a share, and that's up from 3 cents a share. Now, the revenues jumped to $48.5 million from $27.7 million. Now, the street was expecting in the range of about $43 million. And, you know, this is a casual fast food joint. 10% of their stores now are in Manhattan. I'm not talking about New York in general. I'm just talking about Manhattan. Okay, and they have a lot of competition out there. Their top competitors in that niche space are the likes of Smashburger, which is coming public soon, so that's going to be another situation, and In-N-Out Burger, as well as Habit Burger in Anaheim. Now, all of these companies that I just mentioned, they grew anywhere from 25 to 45% last year. I'm not talking about McDonald's, Burger King, all that stuff. I'm talking about these niche casual fast food joints. Okay, so they grew anywhere from 25 to 45% last year. So as Shake Shack is growing, so are these guys. And they don't have 10% of their stores in one borough like Shake Shack does. And now you have Chick-fil-A coming to New York City, and that's going to provide additional competition in that area. Look, we haven't even spoken about the minimum wage that's going to hit the company in New York City, and it's going to hit the company, which is set at $15 per hour, and that's way up from $8.75 that it is right now. That's a big difference. Now, with Shake Shack's current earnings, I was just looking at it quick, and it looks like the market cap is anywhere, and again, I can be wrong, but is anywhere from $900 million plus in that area, about $900 plus million. And if they and that's based on only about, I believe they have about 71 or 72 stores in that range. Now, those numbers per location are crazy. This isn't a tech company, and the valuations, in my opinion, that they're giving the company are just overreaching, over-promising in a big way. The sector is a tough sector. It's a tough business. The restaurant business itself is tough. And the reality is that Shake Shack may have a plan to open up hundreds of stores nationwide. You know, people need to realize something, that they are not the only show in town. There is serious competition from the companies that I just mentioned. And once Shake Shack moves into uncharted areas, it may become an uphill battle because, like, most people in New York City don't know of In-N-Out Burger. They don't know of Habit Burger. They don't know of these places. It's the same way that most people outside of New York City don't know of Shake Shack. All right? In my opinion, the stock is priced right, probably in the low $40 range, not close to the $80 range. I mean, where do you go from here? You got 70-something stores. Where do you go from here? I mean, your numbers are fantastic, but that's right now. Now, since the IPO, the stock has jumped over 220% in that range. Granted, they did great this quarter, but I doubt that they're going to be able to meet the expectations of investors at these levels in the future. And look, if they grow too quickly, there was a company a while ago that did the same thing. It wasn't a burger joint, it was a donut joint. They were trying to compete with Dunkin' Donuts at the time. Anyway, so Krispy Kreme was the company. If you don't know of it, just look it up in the history books. Trust me, there's a story with that one. And anyway, so Shake Shack, if they grow too rapidly, they can hit a brick wall, and nobody wants that. So let's see what happens to the price of the stock. I don't look at stocks day to day. I don't look at them week to week, month to month. I have a long-term view on companies. Just I need to make that clear. I don't look. If you're looking for trading, then that's a different story. If you're looking for investing, then this is the information that I'm trying to bring forward. But anyway, so if they grow too rapidly, they can hit a brick wall. So let's see what's going to happen over the next, week, 2 weeks, this week, next week. And honestly, the stock tumbles, and don't get angry at me, but if the stock tumbles, it would be doing the company a favor, allowing the company to breathe a little bit. Let the company breathe a little bit. Let it grow at a steady pace so it can have solid growth for the long haul and not be a flash in a pan. And that would be the best situation, the best scenario for Shake Shack, because they do have a decent business model. But if they're forced to grow at a rate that they're not ready for, and if they go into markets that they haven't implemented a marketing scheme in yet, and they go in there too rapidly, they can fail at those locations, which would impact their total earnings, which would impact total revenue, which would impact the total company. And that's about it. Again, I want you to just look at the company and you make your own decision. I need to, for full disclosure, I need to say that any companies, any stocks that I do speak about, I don't personally own purposely, because I have to give my unbiased opinion. And if I did own it, I would have to say that I owned it. But I like to give my unbiased opinion because I think it's important that investors see the whole picture, the total picture, not just the hype and the media nonsense that comes out. You get the information, you're hearing stuff from all over the place. You know what? You have to make informed decisions. Be an informed investor. Go out, do your own homework, do your own research, and don't solely depend on one piece of information from anyone. Okay, so, definitely do your own research. And that's about it. Join us for other segments of the Money Never Sleeps Quick Shot, and we're going to be back with you with a full, blown-out Money Never Sleeps show in the next few days, so please join us.
Initiating shutdown sequence.
You're listening to UCW Radio in your face.
What is your major malfunction?
So let it be written. So let it be done.
Ladies and gentlemen, my mother thanks you, my father thanks you, my sister thanks you, and I thank you.